Is I'm visible to you? Please reply. Okay, okay. So let's start. Statutory liquidity ratio is what? Like CRR, all banks, all banks have to maintain certain amount, certain amount of their NDTL, net demand and time supply, with themselves, with themselves in the form of gold, cash, in the form of cash or gold or government securities. In the form of cash, gold or government securities is known as SLR, right? At present, SLR is 18%. It is 18%. SLR is 18%, but it can be changed at any point of time by RBI under monetary policy review. Monetary policy review by MPC. Monetary policy review by MPC. If there is a requirement, then definitely it can be changed by the Reserve Bank of India. Now, banks, as again we will go for this example, 100 rupees is held by the bank, NDTL, right? 100 rupees is NDTL. So, CRR is 4% and SLR is 18%. And that is mandatory to maintain in cash, right? And cash is not going to give you any kind of what, any kind of return. It will be in the cash. So when the option will be open for bank to maintain either in the form of cash, gold or GSS, government securities, bank will definitely go for what? Bank will definitely go for government securities or gold. Government securities or gold, but their first preference is going to be government securities, not cash. Why not cash? Because if they will put in the cash, they have to bear the burden of interest payment from their own pocket, because this NDTL is comprised of what? The deposits made by the customers, and on those deposits bank have to pay the interest. So if bank is going to maintain this amount also in the form of cash, then bank have to bear the responsibility on its own from its own pocket to pay the customer. So that is why bank is not interested to have in the form of cash. So they will go for gold or government securities. Now gold is volatile. Gold price increases as well as decreases, and it is fluctuating. So if at the time of repayment of this means at the time of maturity, at the time of maturity or customer is withdrawing its money, right, and at that point of time the price of gold is decrease, so rather than profit you will be in the loss, right? So that is why again banks are reluctant to have this SLR in the form of gold, right? And gold is always maintained in the form of bullion. Bullion means either standard coins or bars. It is not like in the form of jewelry. So that is why gold bullion. And you can see the gold bullion price every day in the newspaper, in the economy page, the bullion prices are being mentioned there, right? So gold is risky. Cash is going to what? Cash is going to give you the kind of loss if you will try to maintain the SLR in the form of what? In the form of cash. So banks will go for government securities. Though I have explained the government securities, just giving you the brief idea again. Government securities, GSES, we also call this as a gilt edge securities. Gilded securities. Why gilded securities? Because investment in those securities is always considered as a safest investment. So they having the safest investment option. That is why they are also given a special name, gilt edge securities. In short, they are known as what? They are known as GSES. And primarily they are divided into two parts. One is of short term and long term, right? Long term, short term and long term. Though in the short term even there are the various categories. For example, there is one category known as CMBs, cash management bills. So cash management bill we will discuss later when we will come to the capital market and money market. We will discuss it there, not here. Just short term securities up to 1 year, up to 1 year, and that can be start from 91 days, 182 days, and 364 days. And they are known as treasury bill. They are known as treasury bill. Treasury bench means, as we have the political system which is having the large features adopted from the British system, and in British system the government's branch which deals with finance and economy, that is known as a treasury branch. Treasury bench, right? So bench. So the bench or the department which is issuing the bill to borrow the money. So that is why it is known as treasury bill. In short, it is known as T-bills. It is known as T-bills. Earlier, it was also 14 days treasury bill, ad hoc treasury bill system, but it was abandoned in 1996. So it is not there. So that's why I'm not mentioning. I'll explain about the ad hoc bills in the chapter of budget, right? So 91 days, 182 days, 364 days. When it is about the long term, from 1 year to 40 years. So even they can have the maturity of 40 years also, or minimum 1 year, and they are known as bonds, or properly they will be known as government bonds. So that is government bonds, right? So they will be considered as a government securities. They will be considered as a government securities, or any security issued by state government, right? Development securities. So also consider under government securities, right? Also consider as a government securities. I'm telling you this since the beginning. The things which are for government of India, the same kind of system is also available for the state government. So these comes under the category of government securities. If a state government is borrowing through that paper, right, then it also comes under the category of what? Government securities. So banks have to maintain SLR. They have option of cash, gold, or government securities, but most of the banks will go for government securities, right? And the means the percentage of SLR, the percentage of SLR in the economy, in the percentage of CRR in the economy, it is not only just going to reflect. Here we are studying this CRR. Acha, just tell me one thing. What I explained till then, now is it clear? So after that, I will move forward. Is it clear? Okay, maybe there will be some delay. I'm not getting the comments here. Okay, so considering it is clear, I'm moving forward. So now what I want to say about CRR and SLR. They are monetary policy tools under reserve requirements, right? Under the reserve requirement. But these CRR and SLR also reflect the nature of countries' economy, whether it is socialist, mixed, or kind of capitalist. Socialist means most means of the means of production is in government control. Mix mean private plus government, right? Capitalist means only private sector, only private sector. So definitely, if the economy is of socialist nature, and under the socialist nature, all means of production is under the control of government through its companies. In that case, government need more funding. Government need more funding to run their production activity, and at the same time, government do not want to allow the private sector participation. Classic example is India. India claimed itself as a mixed economy where the private participation is allowed. But from 1960s, especially 1960s to 1990s, in this phase, we claimed that we are a mixed economy. But doing the business in India for private business, doing the private business is in India was so difficult. Why it was so difficult? Because most of the production activity is done by the government. Number one. Number two, government through RBI's monetary policy. Monetary policy, CRR and SLR. So CRR is about 10% or even sometimes 15%, whereas SLR is 40%. So if SLR is 40% and CRR is 50%, so bank have NDTL of what? Bank have NDTL of 100 rupees, and out of 100 he have to put 10 rupees cash and 40 rupees as government securities. So 50% of money of bank is blocked. 50% of money of bank which he has received in terms of what? NDTL, net demand and time liability, 50% is blocked. So they have only 50% money available for lending to private private person or company. So you have 50% of money. So that's why in India during this phase, interest rates were very high. Interest rates were very high, 15 to 20%. 15 to 20%. So in India, even if you will talk to your older generation, means your grandparents or the people especially who are above 60 or 70, if you will in general discuss with them regarding I want to take a loan to purchase this thing, means home or something like that, right? So they are not going to very convinced. They are not going to convince to take a loan and then purchase something. They are not in very favor of that thing, because they are of that generation where the interest rates were very high. So people will go for bank loan only when people will go for bank loan only when they do not have any option and their ray of hope is almost dead. Only then they will go for bank loans, right? So bank loans means what? You are financially destroyed. You are financially destroyed, that is why you are going to bank to borrow the money. So if somebody is having the bank loan during that era, 1960s to 1990s, if you are having a bank loan, then you will be judged. You will be judged in terms of what that person is do not having any financial credibility. Stay away from that person. So that kind of the mindset was in that era. And all these things, why? Because government want to prevent private business, government want to have a monopoly of government in the production activity, because government feel that ki profit making is going to have some hurdle. We want to go for welfare of all. Welfare of all. So government, rather than profit making, government want to go for welfare of all, and government want to welfare of common and poor people of India. That is why government have this mindset, and with this mindset, with this CRR and SLR used as an arms and ammunitions, and that is why bank rates were very high, and doing the business in India is one of the difficult destination to do the business. Apart from all other terms and conditions, getting the money, getting the credit in the Indian system was very difficult, right? So this is why what happened when you have liberalized your economy in 1991, in 1992, when you have went for liberalization, privatization, and globalization, you went for gradually decrease of CRR and SLR, right? CRR and SLR was gradually decreased, and in that way, what happened? The nature of Indian economy right now, the nature of Indian economy right now, and nature of Indian economy in 2000, you can say that 2007-8. 2007-8, it was kind of pure mixed economy. Pure mixed economy. You will say that, sir, what do you mean by pure? If it is mixed, how it is pure? Pure mixed economy means private and government sector. So almost 50-50. 50-50. In every sector, government sector and private sector was like a 50-50. But if you will see today, 2021-22, it is almost private sector. What private sector is dominating 70 to 80%, and only few sectors government do have dominance of 20 to 30%. Even for example, refining. So refining, RIL and other government companies were there, and all these government companies are making good amount of profit. For example, BPCL, right? Bharat Petroleum Corporation Limited. They are making good amount of profit, but government have eye on to sell off these all these things also. So government clearly is not very interested to do the economic activity, right? They do not interested, and they want to go for more and more private participation, right? Even in the defense sector, government is pushing lot of efforts to make it privatized. Recently, this OBF, Ordnance Factory Board, was dissolved, and the government is going to make it a company, proper company. Later on, government is also going to what, make it private. Like, so we are heading towards US Europe kind of the system, especially USA kind of system, where, for example, in USA, we in India we have DRDO. Defense is a very sensitive sector. So in India we have DRDO, means all kind of the defense research and development, all the arms ammunitions is made by this organization. Research work will done by the DRDO. For example, any missile or something is being under development, or we are developing fighter planes, that is Aeronautical Development Agency. Again, both are government owned. But in US, if US government wants something, for example, their Air Force want fighter plane, right? So they want fighter plane, they will go for private. Means government is going to announce that we want to purchase fighter plane around of 50 billion worth. So we are opening this thing for private companies. Those who are interested, they can bid. Right. So there the bidding system is there. Bidding system is there. Same kind of the nature and characteristics is going to be followed by Indian government also, and they are heading towards this end. So in coming future, you can also see that maybe there will be further downsizing of CRR and SLR. This was predicted by the people. This was predicted by the people in 2012-13. They have predicted this thing that there will be further decrease in the CRR and SLR, and probably CR will come to 1% and SLR somewhere around 12%. They have predicted. But if you will look since last 8 to 10 years, CRR and SLR more or less hanging around what? It is hanging around 4 to 6%, from 6% to 4%, but it is not further decreasing. Even banks are pressurizing to RBI to decrease it, and for SLR also. But it is not decreasing further. Now question arises, if you are heading towards even the private kind of the economy, why you are not decreasing further CRR and SLR? Because CRR and SLR both work as a cushion, right? It works as a cushion for banking system. Now, how CRR works as a cushion? CRR works as a cushion. For that, I'll just give you an example, which I have personally faced this example. It is about 2008-9. 2008-9, the place was Mukherjee Nagar in Delhi, and I was preparing for the civil services at that point of time. And in the evening, we generally go for some tea and discussion. So I saw that there is a long queue in front of ICICI Bank ATM. Long queue in front of ICICI Bank ATM. So I got a little bit surprised why there is a long queue, right? So earlier I worked with the Citibank for almost 2 years, 2.5 years. I worked with the Citibank, so I know some technical things about the ATM and all. So I got curious. So I went to the bank, means that ATM, and I asked the ATM guard, ki, what happened? Is it everything all right? So he said that yes, sir. So I said, why the people are queuing, not on other ATMs? He said, sir, people are worried. They are thinking that कि ICICI Bank डूब रहा है. There is no water here. Why people are thinking कि ICICI Bank डूब रहा है? Why they are thinking in such a manner? So that was ATM guard. So he said that, sir, I don't know. I said, okay, fine. So that was curiosity for me. So I went back to home and I searched on the internet, and there was a rumor. There was a rumor that ICICI Bank is also going to be bankrupt, like Lehman Brothers Bank bankrupted in US. So people are such in panic. They want to take back all of their money, right? So okay, maybe in few hours the ATM is going to dry. ATM is definitely going to dry. So if all the ATMs are going to dry, then what will happen? On the very next day, people will go where? Bank branches. And if people will go the bank branches and bank is not able to give them cash, bank is not able to give them cash, okay, then what is going to happen? You know our media, right? Creating an issue rather than reporting an issue, they believe in the creating an issue. So kind of rumor will be there कि banks do not have a cash. Bank do not have a cash because banks are bankrupt. It is not in the case. It's not like that. Banks do have money, but if they are not going to have certain amount of liquidity in the form of cash and such kind of the panic, such kind of the panic through the rumor or kind of any scandal is going to be there, then what will happen? Most of the people will jump to the bank branches and they will ask for their money. And if banks are in general incapable of catering that requirement of the cash withdrawal, then the people are going to think, yes, it is true, bank is definitely going to be bankrupt. So to maintain cash flow, to maintain cash flow, to maintain credibility of bank is very important, right? So when I explained you CRR, I told you about currency chest, currency chest of RBI. So wherever the RBI have its office, RBI have the currency chest, and if RBI is not present there, SBI, SBI or any public sector bank. If SBI is not there, then public sector bank. Otherwise, SBI is always available. So where the RBI is not available, that current account of CRR is going to be open in currency chest of SBI. So their cash is always available. Their cash is always available. So in case of any panic, what RBI is going to do, RBI is immediately instruct bank and other banks also, because the cash issue is there. So they will immediately mobilize those cash in those area where such kind of panic is being created, and at the same time, government, finance ministry, and RBI is going to send in a statement in the media that there is no need to panic, there is some mishappening, that is why, or some kind of technical error, what generally people will explain. So you can do this thing to prevent any kind of this kind of mishappening, any this kind of mishappening. So it is always going to work as a cushion, and it was well worked, it was well worked when entire western countries, means US, Europe, was facing tremendous stress in 2007 financial 7-8 financial crisis, right? After that, basel committee Basel Committee again recommended to have tier 1 capital, higher tier 1 capital, higher tier 2 capital. We will discuss later. But at the same time, Basel Committee has wholeheartedly praised RBI for their strict measures which RBI was maintaining from last many years. We have started our reforms in 1992. From 12%, we moved to 4%. We are continuously decreasing the CRR. Gradually we are decreasing, but beyond 4%, below 4%, sorry, below 4%, RBI just said no, we are definitely going to maintain it to 4%, right? So all the pressure exerted by even government, commercial banks, lobbying each and everything, but RBI didn't bend down under this pressure, and they maintained that the CRR are definitely going to be 4%. Yes, in the meantime, 4% they allowed up to sometimes 70% reserve should be maintained, 30% will be free. What I explained in the last class, you need not to maintain 100% CRR on daily basis, only on 14th day 100%. For the rest of the day, you can even maintain 70%. So this kind of the freedom RBI has given, but it did not decrease in effectively CRR. Sometimes 3.5, but overall in an average last 10 to 15 years, it is 4%. So in that way, such kind of the panic situation was handled very well in the 2007-8 crisis. Recently, we have seen the kind of crisis of PMC Bank, right? But that is different kind of the crisis. We will discuss in the banking section when we will discuss the bank operations, the stress testing and all. I'll discuss this thing there. But as of now, the cash related crisis can be prevented in such a manner, right? Now, how SLR, CRR, why CRR is there? Is it clear? Why CRR is there? Is it clear? Yes, Chetan, I said that 90%, but it is not always 90%. Even RBI can say that it is up to 70%. It's policy decision. It's not fixed कि 90% is maintained. RBI even can say that you have to maintain only 70% of your CRR. So it's a policy decision which can be changed time to time. So this is not key, always will be 90%. It can be 70%. For your understanding, I told you it's 90%. So CRR is okay. Now SLR. Why SLR? As I told you, because most of the banks are going to put their SLR in government securities or gilt edge, gilt edge securities, right? So they are going to maintain the form of gilt edge securities. That means there is no possibility of loss. There is no possibility of loss when you are going to put your money in the form of investment here. But after 4 plus 18 means 4% CRR and SLR, right? So remaining money is available, remaining 78 rupees is available. So this 78 bank can invest in different areas, right? Low risk, high risk, right? Though there are the certain RB norms, but there is a possibility of loss. There is a possibility of loss. So if there will be any kind of the loss here, that can be cushioned or that can be manage whatever the profit you are going to get it from here, because this investment is going to be in what, government securities. So if there will be any loss in this money, right, which is going to be in the risk areas, then that risk or any loss, possible loss, can be cushioned from the investment and the return getting we are going to get from SLR. So SLR will mitigate any kind of possible loss, right? So it is going to minimize the loss or it is going to mitigate any possible of loss of banks property which banks is going to invest in the risk areas. So that is why for mitigating or minimizing the loss, SLR have to be maintained, right? And at the same time, SLR will also work for the source of government funding, right? Government can channelize banks' money for their own requirement. So this is why SLR is being there. Clear? So CRR and SLR, its purpose, why it is being there, and how they are affecting the economy. Is it clear? Okay. So when I have drawn this diagram, I told you monetary policy tools, quantitative tools, qualitative tools, and under the reserve requirement, we have these two things. Then is the policy rate, and then is a market operations, OMO and MSS. Right. For policy rates, it is basically about interest rates. For interest rate. So for interest rates explanation, I need consolidate 1 hour. I need minimum 1 hour in consolidation. So I am going to discuss tomorrow about the interest rate tomorrow. Today I am going to first explain this part to you, what is OMO and what is MSS. Then tomorrow means in the next class, what I am going to explain you first about what is the interest rate and the nature of interest rates in India. One is managed interest rate, one is free market interest rate. So in the economy like India, interest rates are heavily managed, right? Subversion of the interest rate. So first I'll explain you the interest rate, right, and what is the objective from the monetary policy objectives. So in total, I'll explain the interest rate. Then I will come to the long-term interest rate, short-term interest rate, in very short-term interest rate, bank rate, LAF, and MSF. Right, but that need a continuous 1 hour of discussion, and it is going to very intense discussion. So I'll request to all of you, if you will go and read some basic things about the interest rate, or even if the RBI, what is the bank rate or LAF, if you will read, before this lecture, it is definitely going to help you, right? So today, first I'll explain OMO and MSS. In next class, I will discuss this policy rates under the interest rate, right? So, okay. So there was a two tools. One is OMO and other is MSS. So OMO stand for Open Market Operations, and it is market stabilizing scheme, right? So open market operations. If we will see CRR, SLR, bank rates, LAF, and MSF, these facilities are in general exclusively for banks. Exclusively for banks. Exclusively for the banks. Though sometimes interest rates is also offered for other organizations like insurance companies in case of contingency kind of situation, but in general these facilities are exclusively for the bank. Whereas when we talk about open market, so open market means it is open for entire financial system. So open for all. This operation is not having just objective to increase or decrease the liquidity in the banking system. Open market operations are not just intended to increase or decrease the money supply only in the banks, but they are intended to increase or decrease money supply for entire financial system. Question is how? Question arises how? So for this question, I am the answer. So I am going to explain. In open market operations, there are two kinds of the operations. One is selling operation and another is purchasing operation. Okay. Now, what RBI is selling and what RBI is purchasing? RBI is not selling, purchasing anything else except government securities. Long term and short term both. So RBI is going for selling operation and purchasing operation. Whether it is selling operation or purchasing operation, what RBI is doing, RBI is selling government securities, purchasing the government securities. So whatever the government securities are available in the market, RBI is going to purchase it. And selling operation means what? RBI have certain government securities. That government securities is going to sold by RBI in the market, right? And many times they do ask this question, especially objective type of questions. If RBI will go for selling, liquidity in the market will be increased or decreased, right? RBI is going for selling operations, then the liquidity is going to increase or decrease. Fine, this kind of the question. Same question with the twist. Under the selling operation, I'll write this question so it will be easier for you to get this question, because terms means language is going to create an issue. One kind of the question, if RBI will go for selling operation, then liquidity, then the liquidity in financial system will increase or decrease or will remain same, right? One kind of the question. So as I told you, two operations, selling and purchasing. Under selling, RBI have certain government securities. Suppose that RBI have a government security of 100 rupees and RBI is offering 5% interest on it, right? 5% interest on it RBI is offering. So RBI have this security, and who are invited to purchase? RBI is selling something, and who can purchase? Banks, mutual funds, insurance companies, right? Insurance companies, NBFCs, non-banking financial companies. So all constituents of financial system are being allowed to purchase this government securities, which is going to be sold by RBI, which is going to be sold by RBI, right? So all financial systems participants are being allowed to participate in this operation. That is why it is open operation. It is open operation. I hope you got this clarity why it is called as open operation, right? Why it is called open operation. So all these participant of financial system are being allowed to participate in this activity. So RBI is selling something. If any one of them are going to purchase, if any of them, suppose that any NBFC has purchased this security, so this security will come here and money will go to RBI. Money will go to RBI. So RBI financial system, right? So if RBI is going for selling operation, RBI is going for selling operation, then liquidity, liquidity will move from here to here. Under the selling operation, RBI is offering government securities. Then liquidity will move from financial system means what? Bank, mutual funds, uh, banking, insurance companies, NBFCs. All these are the part of financial system. So if RBI is going for selling operation, liquidity move from here to here. So RBI's liquidity of RBI is going to increase. And under the selling operation, liquidity is going to decrease. Clear? Because money is going to be diverted from the financial system to RBI, right? Because RBI is offering government securities, and I told you government securities are always having one X factor. That X factor is they are non-risk investment, no risk investment. So it is always a kind of hot selling cake. So whenever it is going to be available, immediately all participants will try to purchase those government securities. So when RBI have to absorb, right, when RBI have to absorb something, absorb the liquidity from the market, RBI will go for selling operation. And vice versa is what? If RBI will go for what? If RBI will go for RBI, now it is purchase operation. RBI will go for purchase operation, financial system. Then liquidity is going to move liquidity will move from RBI to financial system. So liquidity decreases, liquidity increases, right? Liquidity decreases and liquidity increases. So when RBI want to increase the liquidity, when RBI want to increase the liquidity, RBI will go for what? RBI will go for purchase operation, right? But many times student, especially under the stress condition of the exam, they'll get confused. They'll get confused: selling operation, purchasing operation, selling operation, purchasing operation. So if you are getting confused, right, the simplest way to understand this thing is what? In the last class I have given some example of double dip recession, helicopter money, why it is called helicopter, right? So it's simple. If I will purchase something, my money will go to the seller. If I'll purchase something, money will go to the seller. So seller's liquidity will increase, my liquidity will decrease. So if I'll purchase something, I am going to increase the liquidity of the person to from whom I am going to purchase. So if RBI is going for some purchasing, RBI's money is going to decrease, and the money from where it is going to purchase, it is going to increase, right? And remember, it is not just going to increase the liquidity of banking system, it is going to increase the liquidity of entire financial system. So is it correct statement when RBI will go for purchasing operation, only banks liquidity get affected? No, it is not correct statement. Only bank is not correct. Banks liquidity is getting affected under RBI's purchase operation. Yes, that is true statement. That is correct statement. Banks liquidity get affected. Affected means either increase or decrease if RBI will go for market operations. So statement is RBI is going for market operations. Then the liquidity of banks will going to be affected. True or false? True. Banks liquidity definitely going to get affected because banks are also participants in the open market. But if the statement will come only bank, then it is incorrect statement. It is incorrect statement. So this is the simple thing: open market operations for the purpose of increasing or decreasing the liquidity, intended not only banks but intended for entire financial system. Then market operations are used, right? So question can be in that manner also: RBI want to increase or decrease the liquidity of entire financial system. Which of the following is going to be more effective? Bank rate, LAF, MSF, or OMO? Answer is OMO. Why? OMO is open market operation, right? So for entire banking system, this is most effective tool. Fine. Got this clarity? Is it clear? Okay, fine. Now, in the recent years, one more term under OMO, one more term, operation twist. Operation twist is being used, right? Operation twist. How many of you heard about this term, operation twist? Operation twist. Okay, no issues. Even nobody has heard about this thing. This is why you are here, not to understand. No issues. So, operation twist, right? So, why it is operation twist? Because in operation twist, selling, purchasing, selling and purchasing both operation will be executed. Selling operation and purchasing operation means RBI at the same time. Generally, what I told you what if RBI want to increase the liquidity. RBI want to increase the liquidity. RBI went for purchase operation. So RBI went for purchase, liquidity increased in market. Right. Now RBI want what? RBI want to liquidity decreased. So RBI starts selling and liquidity decrease. Then question is why selling plus purchasing simultaneously under operation twist. Under operation twist, why RBI is selling and purchasing. When you are selling, what you are going to do? Liquidity is going to decrease. But at the same time, if you are going to purchase, liquidity is going to increase. Right? Liquidity is going to increase. And I told you what they are going to sell and purchase. They are going to sell and purchase under this open market operation. Under this open market operation, what they do sell and purchase? They sell and purchase government securities, and I told you they are of long term as well as short term, right? Short term up to 40 years and up to 1 year, right? So up to 1 year and up to 40 years. So long term securities and short term securities, both kind of securities are there. So when the selling operation or purchasing operation, when this is little bit complicated, so please pay attention. when RBI will go for only selling or only purchasing, then RBI can go for either of the securities. Either it can go for selling of long term or short term. Doesn't matter. Whereas RBI is purchasing, again, it can be long term or short term. Right? Either can be long term or can be short term. But when RBI will go for operation twist, it is going to sell long term, right? And it is going to purchase short term. It is going to purchase short term and it is going to sell long term securities, right? So long term securities selling and long term securities purchasing. To understand this thing, why long term and short term purchasing, as of now, just keep this thing in your mind that they will go for short term and long term selling and purchasing, right? To understand this thing, you have to first understand one characteristic of this securities, right? I told you in the very beginning, there is a security having the price of 100 rupees. RBI is offering 7% interest rate, right? So there are the two kind of the option. Either RBI will write it here 7% interest is offered, or what RBI can do, RBI will write it here this security of 100 rupees but with discount of 7 rupees. It is available. It is available at the discount of 7 rupees. So if it is 100 rupees security and available at the discount of 7 rupees, so if any bank is going to purchase, bank have to pay only 93. And when it is going to mature, bank will get how much? 100 rupees. So RBI is selling this bill on discount of 7 rupees. So that is why interest rate is also known as discount rate or discounting of bill. Is it clear? Is it clear? Discounting of the bill is clear? Is it clear? Discounting, have you understood the discounting? Okay, I am assuming you understood. So now be very attentive on this statement. RBI was selling at how much price? 93. That means price of this security. Price of this security is 93 as per RBI quotation, and profit we are getting 7 rupees. So in the market term, we called it as a yield, and this is price. Price and yield. What is price? At what price RBI is selling means what discount RBI is offering, right? RBI is offering the discount of 7%, that is 7 rupees for this 100 rupees security, 7%. So the price of RBI's security is 93. It's a little bit complicated, my dear. That's why I'm repeating a little bit again and again. But you have to understand. Once you will understood, it is going to be very smooth for you. But if you are not able to understand, it will create a difficulty for you. So one is a price. This is the price which RBI is offering. When RBI is offering at 93, then yield is 7. Then yield is 7. Suppose that RBI has increased price from 93 to 94. Means price increased. What is the actual value? 100, but now RBI is offering only on price of 94. So earlier price was 93, now price is 94. If RBI is selling at 94, what is the yield? Yield will be of 6 rupees. Yield will be of 6 rupees. Right? 6. So what I am trying to explain you is price of bond and their yield are in inverse proportion. They are in inverse proportion. If the price of bond offered by bank or anyone, if the price of bond or security is increasing, then definitely the yield is going to decrease. Got this point? It's a common phenomena. It's a common phenomena, and the price is going to increase, then yield of that bond is going to decrease. From 94, even further, if RBI is going to increase it 95, then yield is going to be what? Yield is going to be only of 5 rupees. So price of bond is going to increase from 95, 93. Earlier it was 93 rupees. Now it is 95 rupees. So at 93 you was getting 7, and at 95 you are getting only how much? 5. So this is why price of bond and yield are in inverse proportion. Or same statement can be written in this manner: price of bond and interest rate are in inverse proportion. So that is yield can be also termed as interest rate, right? So yield or interest rate and the price of bond are always in inverse proportion. Is this point is clear? Is this point is clear? Okay. Now what RBI wants? RBI want means as an RBI, what I want, I'm considering myself for a minute to make you understand. I'm the RBI one, and what I want to increase the liquidity in the market for short term. I want to increase the liquidity in the market for the short term, only short term. Objective is increase short term liquidity. Right. Short term here is important. Right. Short term here is important. Now we know that from market operations definition, if RBI will go for increase, RBI want to increase, just forget this term short term, just focus increase the liquidity. So if RBI want to increase the liquidity, for that objective, RBI will go for just increase. Purchase operation. Purchase operation and liquidity will increase. Right? Purchase operation. But our focus is what? Our focus is to go for increase of only short term liquidity. Only short term liquidity we want to increase. We do not want to increase all liquidity for shorter duration only, right? For shorter duration only we want to increase the liquidity, not all term liquidity, right? So for this, RBI will do what? RBI will do this operation twist, right? RBI will go for operation twist. RBI is going to sell long term securities. So when you will start selling long term securities, means the supply of long term security, the supply of long term security is going to increase. When supply of something is going to increase, demand is same, but supply is increases. I explained this phenomena in SEBI special lectures. In the third lecture, I explained, second lecture, I have explained about this demand and supply. And if you have not seen there, just give me a second, I'll show you. So in this diagram, I have explained to the students, you can also go to that lecture to understand this price mechanism in the market. The price mechanism I have explained in this diagram. So you can go to that lecture and just go to that part to understand that thing, right? I've just giving you the reference. Okay. So just giving you the reference. If you want to understand, you can go there, right? Now, what I want to explain is demand is same, but supply is going to increase. Then price will what? Then price is going to decrease. Demand is same, but supply is increasing. Then price is going to decrease. Price is going to decrease means yield is going to increase. Yield is going to increase as per this law, right? So as per this law, so what RBI will do, RBI through operation twist, they will absorb any kind of what? RBI will start absorbing any kind of long term liquidity which is available there, so that long term liquidity is absorbed. Long term liquidity is absorbed in such a manner, you are absorbing the long term liquidity. So the market is automatically going towards what? Our market is going to towards automatically the short term liquidity which is available, right? So it is little bit complicated. If you didn't get that, I'll explain it again. But as of now, you just keep this thing in your mind. What we will go for short term liquidity increase, we will use this operation twist. So operation twist, what? First, we will absorb the long term liquidity which is available in the market by going selling operation. So we will absorb all long term liquidity. And at the same time, what we will do at the same time, we will do the purchase operation of short term liquidity which is available with the available in the market. So by that, RBI is going to increase the liquidity in the shorter term. Again and again, because it's a little bit complicated. That's why I'm a little bit feeling anxiety of what? Because I'm not able to see you, right? I'm not able to see you, so I'm not able to get, are you getting my point or not? So that's why I'm a little bit anxious. I'm not very satisfied what I explained you. Have you got this thing or not, right? But just the thing is, number one, open market operation. Under open market operation, selling and purchasing. Selling for what? Absorbing the liquidity. Purchasing for what? Infusing the liquidity, right? This is open market operation. But selling and purchasing do not discriminate short term or long term liquidity. Liquidity overall, it is going to either increase when RBI will purchase, it is going to increase when RBI will sell, it is going to drain out. But now objective is to increase only short term liquidity. Only short term liquidity we want to increase. So what RBI will do? RBI will do both things simultaneously. At the same time, it is going to absorb all long term liquidity which is available there by using what? Selling operation. So automatically the space for short-term liquidity is going to be available, and then RBI will start purchasing the short-term liquidity and infuses the liquidity in the market. So in this way, only short-term liquidity is going to increase. Okay. Still you have not understood this thing. So I'll do a separate video on this operation twist, because explaining again the same thing is going to be little bit problematic. I'll make a separate video, a full length 30-40 minutes in detail with lot of example. If you want, I will make it. But if you got it, then there is no need to go for that video. So please let me know here. Is it okay? Are you able to got this point, operation twist? Okay, good. If you got it, then fine. Still not got it, so I'll request for paid users. They can use the Telegram channel and message me there. I'll definitely make the video for you. Right? I'll definitely make the video for you without any hesitation. I have no hesitation. I just want your satisfaction. You should understood that thing completely. So this is all about operation twist. Right. Again, it's 10:20 right now, and we are not dead with MSS, because in the next class we have to start with interest rates. So what I'll do, be prepared for the next lecture. Maybe it will go for 1.5 hours, and if required, I'll go for. But in next class, I will finish the interest rate part completely. I want to finish it, and MSS also. MSS will not take more than 5 to 10 minutes. The rest of the time I'll pay on interest rate. Right. So interest rate class is going to be very interesting. You will get more understanding about our financial system, our economy, and how interest rates were administered. Right. And again, what I reiterated in the beginning of the lecture, even before starting of the lecture, I'm reiterating again, you will get the PDF on 20th, right? And from next topic onwards, I'll give you the workbooks so that it will be more convenient for you. Okay. So for today, I'm going to wind it up, right now. In next class, we will first quickly do this MSS, and then we will come to the interest rate part. Okay. Okay then. Good night.